Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Glynn & Associates with your financial market update for this Thursday, April 6, 2017, just getting on to 4:45 p.m. in that Central Daylight Time. These boards are going to erase themselves probably as I'm talking, and then the charts will be fine, but that's how it happens at 4:45 in the afternoon. A small gain in the stock market as the market eyes focus now on the meeting between President Trump and Premier Xi from China. How does that go? What about all the different issues? Trade, North Korea, currency manipulation. I can go on and on. It should be an interesting, difficult meeting, and we'll see how it sounds. You know, when they do a press conference, it all sounds good, but then as Premier Xi leaves, you know, our president, he says what's on his mind, so we'll find out what's going on in there. So let's go to the charts and get a feel for what's going on. In the Dow yesterday and the day before, you can see all the action. This is a weekly chart. You've had crazy action between yesterday and today, and for the week, the market is up 1 point. So with all the crazy gyrations, the big 200-point gain that gave it all back, you're up a point for the week. Interesting. Look at the sideways action here. You're still in an up thrust, but it won't take very much to turn that into a down thrust. And while people keep talking, I was on Sky Business, they're all talking the higher highs and what the market's doing. I don't know what they're sometimes talking about. If you look back here, you were 21,000, then you were 20,600. Now you're at the neighborhood of the 20,500 level. This market has lost 500 to 600 points. It's that simple. If you look at the NASDAQ, you're making new highs. But when you look at the other indices, that is not the case, and that's very clear here on the Dow, as you can see. Now, to get everything back on track bullish, I can tell you this. Take out 20,828, yesterday's high. That will give you then higher lows, assuming this doesn't drop down under 20,451, a higher high. It would be over the 18-day average of closes, and people would get very friendly. But if you'll notice, you closed down yesterday, and all you did today is rally back up to that 18-day average of closes that I talk about so often as the line in the sand, and that's the battleground that is going on. So the what-ifs are in place. If the market continues down, I'm going to look for 20,424 in the lower Bollinger Band. Take out 20,000, excuse me, 828. I can make an argument for 20,919, which is near the all-time high. The bias is down in this market right now. Momentum is flat. Interesting times that we're living in. As you know, Congress is going to break for a little bit here. Are they going to get anything done? We keep hearing about health care. Mr. Trump, President Trump, needs a win. That would bring the market back online. Another loss of any type, this market could get hit fairly hard. We know he's going to get a form of a win tomorrow in the Supreme Court as they're going to approve Neil Gorsuch. However, how they did it with the nuclear option is not a win. Got to weigh everything. When you look at the E-mini S&P, it's pretty much the same type of battle. You were up here. You've fallen back from there, but not as deep as the Dow. The Dow got hit harder than a lot of these markets, and that to me is what's important. It's also fighting a battle. Should this market, with today's low of 2338, decide to take off, you cannot get that bullish pattern the way you do in the Dow. Today's low exceeded this 2340. So even if you came back up, you are stuck with a pattern of a lower low and then a higher high. I think you're just caught in the sideways action, and I think I've been pretty consistent in saying that for quite a while. The NASDAQ is the different world, but that's the unwinding of the Trump trade, and you're going to say, what's Ira talking about? And think about it. This is the market that on November 20th got hit. It is the market that did not participate in the rally off the Trump trade. And as time went by, it not only started catching up, it exceeded everything because I think the market has taken out a lot of the Trump premium and it said, you know, he's not going to be able to do much. And this market is the market that people want to own. You got the Apple stocks. You got all your tech stocks in here. That's what I think is going on. I could be wrong, but that's my guess as to it. What I don't like in the chart is you got divergence everywhere. You're trying to hold above the 18-day average, but momentum is pointing down. Don't know what to do with that. The Russell got hit hard. It's gone from its recent highs all the way back down, almost 100 points lower. It's challenging the lower Bollinger Band, which makes sense because the trend is down. Lower highs, lower lows, making a run for that number. What did it miss hitting the Bollinger Band by? 1.5 points. Basically nothing. In dollar terms, I think that's $60. So in the futures contract. So you're basically there. You've rallied back up into key resistance of the 100-day and the 18-day average of closes. My point here is even if you rally up over this 1382.70, you won't have a trend. You'd have a lower low and a higher high. I think the pros are waiting to sell this market, but I don't know what people are going to do until they see the jobs data in the morning, and that's going to be a big number, so be ready for that. In the VIX, you are caught in this sideways action. You are traveling between approximately the upper and lower Bollinger Bands with this 18-day average, and it is what I've told you. For the time being, this is a contra-trending market. The guy that has got guts of steel, selling the big rallies, getting rewarded. As it's looking to break out to the downside, they're buying it. This is the wrong way to trade, but it's giving the rewards in the VIX. In the 30-year bond, you have the embedded reading. That's bullish. You have a pattern of higher lows and higher highs. That is bullish. Should you lose the embedded reading, then you could fall back to the 18 to 100-day average of closes. Should you keep it, if you clear this area, I think you're headed right on up to the upper Bollinger Band. So that could be a fascinating trade. The 10-year note the same way. Suddenly we're getting, and have been, this big rally in the bonds and the notes. Why? It's because people are not believing that the tax reform is going to happen, number one. Number two, not quickly at least. Number two, the Fed unwinding of the balance sheet. No, it's not coming at you right away, okay? I don't even know if you'll see it in the last quarter of this year. That's the best shot for it. And will it come under Chair Yellen's tenure? Because her term's up in January. Will she be reappointed by President Trump? Will she be the one to do the unwinding? Will it be to somebody else? I can't say. I've been reading reports that say the most likely time that the Fed will make that move, assuming everything stays status quo that we're seeing in the markets, is December. That doesn't mean that those analysts that are writing that are right. But you're still in an uptrend. Should you continue, look for the 125, 10 to 14 area as your resistance. Dollar index backing off from challenging the 100-day average. I would expect support at the 18, but you are overbought. This has been a heck of a rally the market has had. And with the Chinese premier here, are they going to get along? Are they going to fight? Are they going to go their separate ways after the meeting? And then the protectionism's back on. There's so much unknown, and this is such a big event for President Trump. I think we have to wait and let the markets tell us what they think is going on. The same in the euro currency. Now, in the euro currency, I read Mr. Draghi's today excerpts. By the way, I did catch him early in the morning on some of the financial shows, and then I saw the excerpts of his speech. And he is still very concerned that they're not meeting their inflation goal. They're only at 1.5% in March. They want to be at 2%. On the other hand, you've got the Germans that their economy is doing great. They want the ECB to back off on what they're doing and stop all this bond buying, even at the reduced rate. I think that if oil prices were to stay strong and inflation picks up in the euro currency zone, actually, I think that might be what Mr. Draghi needs. On the other hand, if energy prices fall and that impacts their inflation, because he keeps talking about that, that could be a big negative. I think you have to wait and see. The British pound's at an interesting point. It's got lower highs, higher lows. So what could happen on the current formation? Well, If you take out 124.41, I think the bears are going to become emboldened. I think they'll be looking for a break back here. If the market's going to hold it all and be good, unfortunately, you've got to get through 125.88 to get an all-out buy signal, because the real pattern, if you take a look, you came through here, a correction, you come down, you got a lower and low, a high, a lower and low. So the lows have been, in other words, the lower highs have been the key here. They're the first things that happen. So you have to negate that 125.88, but if you take that out, what are you doing? You're trying to pick up just 70 points going for the upper Bollinger Band? I think the bears have an easier go of it if the market's going to do what I think it could do, and that is, which way is it going to get a crossover here? Are you going to get the 18-day average over the 100, or is it going to turn around and bend down? Right now, it looks like it's trying to get over that number. It's an interesting time in that. In the Japanese yen, you have a bit of divergence. You got an overbought condition that refuses to embed with a pattern of higher lows, lower highs. Difficult market to want to do anything with. Then we get to the crude, which is bullish. It's overbought, but higher lows, higher highs, riding the upper Bollinger Band. Everything about that chart, while it's overbought, is still on the strong side, as it is in gasoline, which is starting the embedded reading. So today at both numbers over 80, and yesterday. You can do it as of tomorrow. So it's going to be an interesting day. Generally, you don't embed. Understand that. Generally, you get overbought, but when it embeds, it changes its flavor, if you will. And as you can see, you're right up into the 100-day average in the upper Bollinger Band. In the nat gas, the market tried to break today, but it came right back up and settled at the upper Bollinger Band. It makes me think more and more that we saw the lows for the season back down here, and you're liable to get even more of a bullishness if the 18-day average crosses the 100 and prices stay over that. So a lot of reasons to be a bit friendly there. As you can see, the boards are raced. I wanted to show you that. All these different categories that you're seeing, we're offering information on. You pick and choose. You can have them all. You can choose what you want if you haven't tried it before from Lynn and Associates. This is our in-house research. You won't read about this in other publications. We're very tight about it. If you're an option trader, you're going to love this. I mean, it tells you who's doing what, where they're doing it, why they're doing it, the strategies they're putting on. And this from our guys in the options pits. I mean, we have a lot of analysis that goes on here. How do you get it? It's really simple. You're going to pick and choose, but we have a form. So you can either call us, my brokers will fill out the form. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. You can actually click on any one of them and you'll see the different choices you have. You can click right up here. If you're watching me on YouTube, there's an icon there. Click it. Our form comes up, fill out everything you need, and away you go. I can't make it any easier than that. And considering that we are a firm that deals with a lot of commercials, maybe you want to take a look at that. So how do you get it? Call us, go to our website, or click the icon. I'm Ira. You have a great day.